What's up traders, Tom here with another video. The stock market has just had the quadruple witching hour event. Volume has spiked and price has begun to falter. So what is going to happen to the S&P 500 this week? Stay tuned. Today we'll be talking about some of the latest stock market news and diving into the S&P 500 technical analysis and correlating several pairs together to try to get a bit of inside information about what could be happening over the next coming weeks and try to make sense of the moves and make sense of the key levels in the market right now. So I'll begin by talking about the quadruple witching hour event and what it is. So the event occurs on the third Friday in March, June, September, and December of every year. It's usually about rebalancing as well as expiries of the stock index futures, stock index options, stock options, and single stock futures expiring. So typically the December period is the largest, but what we have seen is we've seen massive trades over the last quarter. More than 16 billion shares changed hands on this quadruple witching hour event, 30% above average in the past 3 months. Another crazy fact is that $1.8 trillion of S&P 500 options were scheduled to expire, making it the third largest non-December expiration on record. And this is data compiled from Goldman Sachs. So the quadruple witching hour event generally not only sparks bursts of trading, but it also has a history where the market may head lower after the event. In today's futures, we've seen the market head up after opening lower this morning. But the futures and the stock market are a very different thing. We talk about it all the time on this channel. Don't see the futures as leading you. Look at the real volume, look where the real traders are, and pay attention to the open and closes of the real stock market. And that is the S&P 500, the most important index of them all. So we'll quickly talk about the Fed balance sheet. Last week, they did some tapering or a little bit of reduction in the balance sheet. It went from 7.168 to 7094. We will have to continue to monitor the federal balance sheet, and the Fed is really everything to the stock market right now, and see what they want to do. If they continue to reduce, it may cause some dips in the stock market, and then they may, of course, ramp it up. But general consensus is by the end of the year, or at least in the next 12 months, we'll get to around $10 trillion on the balance sheet. And you need to keep that in mind. $10 trillion, a lot of money. Here we've actually got the S&P 500 correlated to the Fed balance sheet. And it's pretty funny because, of course, as the Fed balance sheet came in and all that money is being printed, the stock market has pretty much gone in a curve to attach to that level. And it went higher, and now we're trading just higher than the Fed balance sheet when you move them over the top of each other. But what's more interesting is that the balance sheets of percentage of GDP are so high in so many countries. And I've said on this channel a few times, we're going to have a look at Bank of Japan over time, because look at Bank of Japan's percentage of GDP on the balance sheet. They're the craziest ones in the world in terms of how much they own. Australia's getting up there now with more expectation. And of course, the Fed has increased from 19 to 39, which is pretty amazing. The European central banks, 39, headed up to 61. Many large increases. Look at what even Canada's had to do, 5 to potentially 33. Massive increases of percentage of GDP. We talk about this as well. Always make sure that if you're a trader or an investor at the moment, that you're aware of the news. So make sure you get a calendar. We're using forexfactory.com, and that just gives you the news and the key events of the week. Very important to have. So let's talk about correlation and the S&P 500 key areas. So as I said, the futures and the real stock market are a little bit different and very important to look at. So the real stock market closed at 30.97 on Friday. We can see here that the volume spiked to a higher level than it had been, but actually the amount of movement wasn't that much. So that shows that there was probably a lot of buying support going on in the market as well. What we saw this morning is an open below, so around 30.65 open, with a quick pickup in the futures, and now just ahead of market, we're starting to see a bit of sell-off. It went as high as 31.07, We're now at 30.86 on the futures. So let's drive down into 2 hour and just quickly talk about these levels. So really the 30.80 is actually a key level on the real index in terms of it bounced twice off this zone during market opens, and 30.80 should be a level where if it can bust through that on the real open, we would generally see gravitation to the 3,000. So we'd expect the market to try to dip down to 3,000, and if there's buying support, it's most likely going to be at that level. We've mentioned on the channel, go and watch one of our other videos if you want to, about the fact that if it gets under 3,000 to 29.50 is going to be a key buy zone for the stock market. And if it gets through there, back down to the 2,800, 2,770 support. So all the way back down here. So effectively what we'd expect something like this, where the market would go to 3,000, hit this 200 on the 4 hour, 200 simple moving average, bounce down, go into the 29.50 where the futures have traded, because remember this is the futures, and then if it gets under there, all the way down is exposed to 2,800. And we'll talk about why that's our thesis in terms of what would happen on the sell side. As we always want to do as traders or even investors, we want to think about the buy side. So if the market strengthens, we now have very strong resistance here in between the 32.40 and the 31.60. So if it gets to the 31.60, we would expect something like this, where the market would break through, close above, and we would need close confirmation. And then if the market came back down, we would be expecting effectively the market to find role reversal here, where the resistance becomes the support, and then bulls into the previous highs over here, where it finds further resistance and further selling pressure. So there's two sides to the story always. What we need to do is define what is going to be the confirmation signals or the cross correlation that we're looking for when trading these pairs. So one of those cross correlations has been the Australian dollar. So we've talked about how the Australian dollar has been pretty much tracking the S&P in terms of if the S&P 500 has been up, the Australian dollar has been up versus the US dollar. And this has been very consistent since March. So the Australian dollar has a very key support, which I've marked here at 68, a key psychological zone as well. 68 cents makes sense for it to be a key level. If the market gets under 68 cents and closes below, always use confirmation. So we want a candle underneath this zone. Then what that does is it exposes the next level that the market will move to. And I believe that next level is somewhere around probably this 66, 68. There's a few reasons why it would be that. Number one, look at how many touches there are in these zones. So we've got 1, 2, 3, 4, 5. It closed below and went through. Then we have the 6th one where it came up and found resistance and then sold off. Then we have the resistance again here, 7. And then this would be the level where we would also have the 50 EMA moving average on the daily and the 200 simple moving average. And they would pretty much coincide with each other if the market started to sell off. So this distance could be key to what we're looking for on the S&P 500. And you may be thinking, well, what are you talking about? Well, the reason why is because if the stock market was dropping, the Australian dollar would also be dropping as well. Remember, they're correlated at the moment. So if one of these triggers a sell, like the Aussie dollar triggers a sell, the S&P 500 is more likely to also be correlating with it as well as on risk on and risk off sentiment. When this level is reached though, this could be the same time the S&P 500 reaches 2,800 or around that support level. If that was the case, do we think there's going to be buying pressure here from the market? Possibly. Very good chance that this is going to be a key level where people start to buy up the Australian dollar like they're going to be buying up the stock market. It's one of those dips. There is a lot of confidence and there's a lot of buying pressure on the way down because of this idea that the Federal Reserve will cover the stock market no matter what. But what are the other currencies and pairs telling us? Well, I think another one that everyone would agree is gold. Gold pretty much is a hedge against uncertainty and a hedge against several things that the Federal Reserve are potentially doing. Many people are looking for gold strength. Well, gold has been in a channel. It has been trapped between the 1680 and 1750 zone now for a while. Today, it had a run at getting above. But like we always say on this channel, the key is confirmation. So we need to see the market get above, close a candle, and then potentially roll reverse off this level, or the close confirmation is strong enough for the market to continue the move. And generally speaking, a channel will go the distance of the channel itself. So in this case, the 1680 to 1750, which points to further bullish momentum for gold on the daily and on these timeframes, if it's able to confirm. So that's the kind of technical that we're looking at there. But then we've also got risk on, risk off. So when people take risk off, generally that money goes into the major currencies. So you see currencies that are hedges or currencies that are stores become more valuable. And one of those is going to be the US dollar. So we've seen the US dollar strengthening as the S&P 500's weakened a little bit. And because the Fed's also tapering their sheet, the idea is that people are getting a little bit more confident that maybe they're not going to just continuously print and print and print and print. So we're seeing US dollar strength, and there's a bull thesis here where now that it's above this 97.50, we might see continued strength into the 200 and the 50. Now remember, the 200 and the 50 showed up on the odd US dollar on the daily. Roll reversal again. Resistance becomes support, which becomes resistance at the 98.40. So it's putting all these things together. We're cross-analyzing different pairs to try to get an idea that does all of this make sense from a technical price action standpoint? And it certainly does. It actually shows that if these levels start breaking, that all of these things will most likely eventuate. And the reason they do is because it's all to do with the same money flow. It's actually the same trading idea, just through multiple different instruments. It's all that risk off sentiment that would go through all of these pairs. And just like when we say risk on, look what happened to the US dollar. The US dollar started to weaken heavily. It got through key support, which we spoke about on this channel. And after it got through that key support, the bull market continued on the S&P 500. And at that point, we saw the dollar continue to weaken as well. So we saw risk on, risk on, risk on. It's a really interesting concept, and I hope people have got some value out of that today. And just thinking about all the different trading instruments, even if you're comparing different stocks, you look at all of them, you compare the types of setups you're seeing. In fact, you can even look at the sector and compare it. It's a really, really cool concept, and I hope people are starting to realize it's more than just looking at that pair. It's about looking at all of them together and piecing together the puzzle. So remember, knowledge is empowering, but only if you act on it. Make sure to subscribe, hit that bell, like the video if you did, and of course, put your questions and answers in the comments down below, and we'll see if we can create a great video to answer some of the best. Happy trading, everybody, and investing, and we'll see you in the next video. Bye.